Well, it's a 2-for-1 special. As you know, first trading day of the year, pretty much, China, stock market starts dumping 5%, 7%. They shut the whole damn thing down. Trading shut off for a day. Not a circuit breaker like, oh, it's trading's halted for 15 minutes or a half hour or even an hour. No, we're going to shut the whole thing off, like, for good today. So imagine if you're an investor or you're playing the market. Something happened. I need to get my money out now. Got to get my money. Oh, can't. Why? Market's closed. Can't get your money out. This is why you can't play the banker's game. Yeah, but I made so much money playing the market. And you might have lost so much money playing the market too. For every winner, there is always a loser. And by chance, that happens to mostly be you and I. So first we're going to start off with Puerto Rico once again. $70 billion in debt. Can't even kind of sort of pay that off. Gave themselves, what was it, $200 million or something in bonuses. Christmas bonuses. But for the creditors, sorry about y'all's luck. Puerto Rico, according to Zero Hedge, Puerto Rico is Greece. And these 5 states are next to go. Yes, states is in the United States, and I'm going to get to those in just a second. As Wilbur Ross so eloquently noted, for Puerto Rico, quote, it's the end of the beginning and the beginning of the end. As he explained, Puerto Rico is the U.S. version of Greece. However, as J.P. Morgan explains, for some states, the pain is really just beginning, as municipal bond risk will only become more important over time, as assets of some severely underfunded plans are gradually depleted. Wilbur Ross discusses Puerto Rico's debt struggles and where it goes from here. But as J.P. Morgan details, municipal bond risk is on the rise for U.S. states, but broad generalizations do not apply, or in other words, these 5 states are screwed. The direct indebtedness of U.S. states, excluding revenue bonds, is $500 billion. However, bonds are just one part of the picture. States have another $1 trillion in future obligations related to pension and retiree health care. Stop there for a second. How many times have I had to come out here and say, which for just informational purposes to my valuable subscribers, that the Roman Empire, the biggest cause of that empire's collapse, was unfunded liabilities, such as pensions. People hear me say that, well, pensions, the 2,000-year-old Roman Empire, pensions? Yes. You think we just made these things up in recent times? No. What is has always been. What is has not always been, but already been. And always been, because if it's always going to be there and repeating and repeating and repeating, you might as well say it's always there. The Roman Empire couldn't pay its bills. What did they do? Let's expand, let's war, take over places, we'll get their gold, we'll get their money, and have to deal with that economic system and governmental system that you just took over, and found that it was just as hard to deal with that as there's, because the same things apply. People have to work, have a job, they've got to be fed. You just took over, but the people are still there. Your empire is expanding, life is good. The Roman soldiers, they work for 20 years, they get this awesome pension, and for a little while it worked. Until it didn't. And that's when the beginning of the end for the Roman Empire started. Now, I've also mentioned previously shocking similarities. Matter of fact, while I'm here, just similarities between the Roman. It's already filled up. Thanks, Google. You already knew where I was going with that. Thanks, Google. Comparing the Roman Republic and the U.S. government. 6th grade civic wiki spaces? There's quite a few on this one. Let's click on the first one. Similarities between the Roman Republic and U.S. government. Both feature executive and legislative branches. Both systems have checks and balances embedded. The head executives can be removed by power by legislators. The head executives have military responsibilities. No wonder why it said 6th grade civics. That's not quite what I'm looking for. 8 striking parallels between the U.S. government and the Roman Empire. That's more like it. Let's see what we got here. Number 1, staggering increase in the cost of elections. This is exactly what I was looking for. Boy, that was real hard to find. Staggering increases in the cost of elections with dubious campaign funding sources. Our 2012 election reportedly cost $3 billion. All of it. Oh, get this garbage out of my face. Got an advertisement. Closed. Now, let me stop for 1 second, because you're going to find that a little bit ironic. Let me get this garbage advertisement out of my face, and I put them in front of your face. I've knowingly put the advertisements in front of your face on my videos. That is ironic. But, as I said, old J Snip 4 gets 55% of the revenue. So I appreciate it, and I hate to do it to you. But that's why they're there. Staggering increase in the cost of elections with dubious campaign funding sources. Our 2012 election reportedly cost $3 billion. All of it was raised from private sources, often creating the appearance, or the reality, that our leaders are beholden to special interest groups. During the late Roman Republic, elections became, ready for this, staggeringly expensive with equally deplorable results. Caesar reportedly borrowed so heavily for one political campaign he feared he would be ruined if not elected. Number 2, politics as the road to personal wealth. Oh, I wonder what I'm going to say here. During the late Roman Republic period, one of the main roads to wealth was holding public office. Let's see, you go in with nothing in our country, you get into office, Democrat, Republican, Congress, whether it's the House, the Senate, President, doesn't matter, and you leave a multi-millionaire. Number 2, same thing. Number 3, continuous war. A nation state of security arises, distracting attention from domestic challenges with foreign wars. Similar to the late Roman Republic, the U.S. for the past 100 years has either been fighting a war, recovering from a war, or preparing for a new war. Number 4, foreign powers lavish money/attention on the Republic's leaders. Foreign wars lead to growing influence by foreign powers and interest on the Republic's political leaders. True for Rome and true for the U.S. The past century, foreign embassies, agents, and lobbyists have proliferated in our nation's capital. As one specific example, a foreign businessman donated $100 million to Bill Clinton's various activities. Clinton opened doors for him, and sometimes acted in ways contrary to stated American interest and foreign policy. No, you're lying. Number 5, profits made overseas shape the Republic's internal policies. I'm going to skip through this. Number 6, collapse of the middle class. How many videos have I done recently? And by the way, I'm going to tell you now, how many have I not done on that exact subject, because I can't keep doing the same ones over and over again, even though it's new news. Collapse of the middle class. In the period just before the Republic's fall, the Roman middle class was crushed, destroyed by cheap overseas slave labor. Am I having deja vu somehow from a previous life of 2,000 years ago, a Roman slave that I must have been? Because I'm pretty sure we're doing the same damn thing now. Wow. And destroyed by cheap overseas slave labor, in our own day, we've witnessed rising income inequality, a stagnating middle class, and the loss of American jobs to overseas workers who are paid less and have fewer rights. Number 7, gerrymandering. That's a kind way of saying that. Rome's late republic used various methods to reduce the power of common citizens. The GOP, which excuse me, how about just government? Not left, right, GOP, Democrat. Government has so effectively gerrymandered congressional districts, which they said the GOP has, that even though House Republican candidates received only about 48% of the popular vote in 2012, they ended up with the majority, 53% of the seats. Number 8, loss of the spirit of compromise. The Roman Republic, like ours, relied on a system of checks and balances. Compromise is needed for this type of system to function. In the end, the Roman Republic lost that spirit of compromise, with politics increasingly polarized between optimates, the rich and entrenched elites, and populares, Larrys, the common people. Sound familiar? Compromise is in noticeable short supply in our own time. For example, there were more filibusters between 2009 and 2010 than there were in the 1950s, 1960s, and 1970s combined. Shocker. So, back to the main article, right? The 5 states in trouble. Excuse me. Which there's an additional 3 or 4 that are getting close, but we'll go with the 5. Illinois, Connecticut, Hawaii, New Jersey, and Kentucky. Big trouble. A lot of their money, income goes to paying for pensions and things like that, and it's like super unfunded. Not even close to being funded. Once again, unfunded liabilities took the Roman Empire down, and it's taking the current Roman Empire down. You just know this current empire is America. Now, on to something interesting. Again, we had the Chinese stock market crash. They halted it. No trading for the rest of the day. Fast forward 2 days later, January, well, I guess it would be 7th, technically, going over in China. January 6th to 7th, down 5%. Halt the market. Zero hedge. China stocks halted again. Offshore yuan, their currency, crashes after biggest devaluation since August. What did Lindsey Williams say again? Currency wars and stuff. Oh, that's right. It'd be race to the bottom, race to devaluation, and that's exactly what's happening. And I just read about the Federal Reserve. They had this little meeting, and they were talking about the different Fed, the 12 regional Federal Reserve heads. They all get together with Janet Yellen being the top Fed official. And the rates. We all mostly were in agreement with that, but the problems with the strong dollar and this and that. And I caught that line. Hold on. What did you just say? Something about there's an underlying problem with the strong dollar? Because all these decades, all I heard was about strong dollar, U.S. dollar, strong dollar. And I've said this before. And some of you who've been around for a while, watching me, listening to me, I've said this. They are going to flip the switch on the dollar being strong, or strong dollar policy. And you're going to hear why it's a good idea to have a devalued or weaker currency. You're going to hear that. And I just got a whiff of that, if you will, today, reading about these Federal Reserve bozos getting together and having this chat. And I heard that. I saw the line. Mainstream news article too. Problems with the, underlying issues with the having a strong dollar. They're gearing you up for devaluation. God help you if you don't have your precious metals. So U.S. equity markets are tumbling, he says. The USD to Japan yen is in free fall practically. Someone just stepped in to support the offshore yuan because it, after completely being destroyed, flips a switch and bounces back up. Again, we know there's market manipulation. But with this wild swings, most of it going down. It says, as we detailed earlier, following the collapse of the offshore yuan to 5-year lows and decompression to record spreads to onshore yuan, the People's Bank of China has stepped in and dramatically devalued the yuan fix by 0.5% or 0.5% to 6.56 0.46. This is the biggest devaluation since the August collapse. Offshore yuan has erased what modest bounce gains it achieved intraday and is heading significantly lower once again. Dow futures are down 100 points on the news. People's Bank of China fixes yuan at its weakest since March 2011, with the biggest devaluation since August. And offshore yuan collapses. This all has a worrisome sense of deja vu all over again. We have seen this pattern of money flow chaos before. Outflows surge from China, send liquidity needs spiking, which bleeds over into Saudi Arabia stress, petrodollar ? Causing unwinds in major equity markets thanks to deleveraging of carry trades in China and then U.S. stocks. Chinese stocks are open and they are down hard. Shanghai Composite falls 4%. Composite Extended drops to 10% below December high. Hang Seng China Enterprises Index falls 3%. And the China CSI 300 Index falls 4%. And then a halt occurs. Hold your breath. Dow futures plunged 100 points on the news. And if I can get a time frame, 1700 hours to 1800. So you're talking hell to, I'm doing this video at 9:14. Right now is 9:14 p.m. Eastern time. And this chart is from 1700, 1800. So you're talking 5 to 6 p.m. Now, I wonder, Dow futures, can old Snippety take a peek at that pre-market? S&P's down 1%, NASDAQ's down 1%, Dow's down almost 1%. It was 100, it's now minus 150, down 150. What was that thing about Lindsey Williams being wrong? The markets are fine. He said it happened before December 31st. And since it didn't happen by that exact time frame, he's a bozo, and I'm not going to listen to him. I'm sorry, am I reading this right? That China had 2 halts? The 4th and now the 6th or 7th, depending on what time zone you're in. So a couple days from each other. The whole damn market's halted, China. Our markets were down on the red. Rebounded a little bit, ended in the red. Now we got this news. Now they're starting off in the pre-markets down. I told you it was go time last year, at the end of the year. Those of you who want to write off Lindsey Williams, write him off. I hope you've got precious metals, regardless of your views or thoughts and opinions about Lindsey Williams. I've been able to make very good decisions in my life based upon that man's information. It is also why I just pulled the trigger recently, as I mentioned, on some more silver. And I can just see it now. I'm going to do this little game show, the political game show thing on YouTube. I'm going to give out these prizes, right? These silver prizes. And I thought to myself, man, silver is cheap right now. It's $14. And I'm thinking to myself, man, can you imagine if it just goes to $100 and I have to go out and buy silver? And I'm planning on giving out like 3, 4, 5 ounces here and there, if I can keep doing that, maybe more. Again, as the views on that channel go higher, the more ad revenue comes in, the more I can spend on silver to give out as prizes. But in my mind, I'm thinking, wherever I start, let's just say I give out 5 ounces per show, and I'm doing that once a week. 5 ounces at $15 is not too bad. Okay? But 5 ounces when silver is $100, that's $500. And I'm here to tell you now, you know how you go to the grocery store? Over the last several years, it used to be an 8-ounce can, and they changed it, and now it's 7 ounces. Or they had the same size can, but the ounces inside, a little bit less. Bag of chips, bag of anything. Same size bag, less chips inside. I think OJ Snip 4 may be pulling one of those on you guys on the game show. Hey man, didn't you used to give out ounces? Yeah. Now I'm giving out grams. Why? Because 5 ounces will cost me $500 in the near future. Whereas now I can get 5 ounces for less than $100. I'll be doing some ancient Roman Empire coin clipping Maybe I'll do it live on the camera. I got to clip some of the silver off and remelt it in my little, I'll make a little homemade thing on my desk. Melt it down. Smelter. JSNIP for the smelter. Anyways. Not a good way to start off the year. But we knew this was coming. We just thought it would be here a little earlier. Take care.